Hello and welcome back. Let's see here. I have moved, as you can see, if you're a regular watcher, if you're not new, I have moved from over there in my office to over here. If you recognize the Odessa original, original, what do you even call those anymore? Like a vacation poster stamp? I don't know, because it's not a vacation card. It's like a stamp. But yeah, from like 1986. It was one of the few places you could go on vacation in the Soviet Union. Regardless, today I'm going to answer the Saturday questionnaire. The sound is looking okay. I turn it up a little bit. The sound should be perfect now. It is 11:15 a.m., so it's a bit earlier. Usually the videos are closer to getting close on the one day. However, let's see the point. I'm doing a questionnaire so late. So we'll get into all of that. But before we get into that, I would like to say that if you like this video, if you like this type of content in general, feel free to join the Discord. It'll be linked in the description below. There's nothing there for sale or anything like that. No bullshit. We don't do that. All right, so let's get to the questionnaire. And also with this new setup now, I have a lot. My desk is a lot bigger, so I can have a secondary monitor where I can just read off the questionnaire, and I won't have to open the Discord like I will be doing here now. The weekly questionnaire here, which will be a lot cleaner in my opinion. Because I brought some sources ready, I don't want to just talk. I want to answer. I want to actually answer the questions. So, start up with Sharker. What are the underlying reasons behind regulations in the EU and globally? Can't answer for globally, really. It depends what you mean, what country specifically you mean. That make traders' lives more restricted, such as the EU's ban on rebates. That's coming out of Hungary. So that's very relevant for Hungary because Hungary is in the European Union. You just had an election, and the winner, Orban, lost, is a lot more EU friendly. So you can expect a lot of adoptions of more EU regulations. So that becomes really relevant. All right. So first off, I want to read off the official reasoning. I'm just here on TradingView. They're they've posted the what they call PFOF, the PFOF ban. It's officially stated that most of this is don't need to read all of that. The important part, I looked through it and I checked with another source as well. I don't want to ask a chatbot. They're pretty inaccurate. They'll just source these sites anyways. But yeah, here. The critics argued. So when we're talking about the critics that argued here, it's the European Union's Financial Commission members. Critics argued that the arrangement created an obvious conflict of interest. We're going to get into some data of that as well. And what I'm talking about here now is the rebates Sharker. A broker collecting rebates has an incentive to send orders where the kickback is highest. So they get the most from the market maker, not necessarily where the customer gets the best execution price. So their argument was essentially, now I'm giving you the official reasoning. I'm going to tell you what I think for afterwards, but I think it's also really important to be objective. So you have to give the official reasoning. So they were arguing that they weren't giving the best execution prices. They had some empirical data for it as well. So they were basically saying these brokers were offering rebate deals for buying from the liquidity provider, which is what gives us the bid and ask price. The more liquidity providers a broker has, the better bid and ask price they get. But then they got the incentive to give shit spreads. The EU agreed. Under the revised whatever rules, the practice is banned across the bloc from June 30th, 2026. So, as you can see, it's going to be banned in 2 months on the 30th. But the ban has been in effect for a while. But this is like the deadline. With Germany and a handful of other members that had previously allowed PFOF a temporary exemption running until that same deadline. Germany gave them a outliner. As this is not like a huge thing, a lot of countries are just ignoring it. It's not something that the European will notice. So as you can see here, most of them, they had already banned it or never really gave a shit. And also outside the EU as well, even though Norway voted against joining the EU, Norway has never said no to an EU proposal. Because they can't give us demands, they can only give us proposals, but Norway has never said no. So we're de facto EU. When people say Norway is not part of the European Union, we are. We are. So what was even the point of the vote? You join and it's mandated, or you join and it's voluntary, but our politicians accept 100%. I'm not exaggerating. 100%. They've never said no. Ever. To the European Union. Anyways, let's look at another source as well because this gave some better empirical data. So in the EU, it's banned like from June 30th. That's when it becomes illegal. So most countries banned it late last year, I think, or early this year. And even if you had a rebate up until that point, who gives a shit? Because you would get sniped out by now. And I mean, in my opinion, this is unfortunate. This is really unfortunate because it punishes the meticulous traders and it rewards the morons. Okay, so because the controversy around payment of order flow, the European Union has decided to ban the practice from 30th of June 2026 onwards. This means brokers in the EU will no longer be able to receive compensation for sending you your orders to specific market makers. That was the whole argument. So let's say the amount of liquidity providers IC Markets has is 10. Their argument was that they would send it to specific liquidity providers. So you would get shittier spreads because if they all 10 have to compete, obviously you're going to have like 6 spreads like we do on IC fucking markets. And then the exemption, but here is the important part. Let me find it. Yeah. So here they did a Spanish regulator. They did it for Spanish stocks. It shows that the traders executed on behalf of the PFOF brokerage clients through the PFOF TV on Spanish stocks during the first half of 2021. Best execution was seldom achieved. Only 3.3% of traders. When they say best execution, just think lowest spread. Lowest spread. And in most cases, I'll just say spread, bro. I'll simplify the lingo for you. And in most cases, 86% of traders got shit spreads, okay, compared to other brokers. Yeah, and the average, this doesn't mean shit. Deterioration, so they lost a euro in spread. But okay, there's also a concern about transparency and whether investors fully understand how their trades are being handled. Yeah, so this is kind of poorly worded. I've never used a rebate on investing. Who the fuck would do that? Like we're doing this because we're high frequency traders. Now, this is the official reasoning. This is what the European Union Commission, I mean, these Spanish regulators, Spain is in the European Union, so all of this is EU regulated. These are EU passed regulators. These are EU approved regulators. These are regulators that are working within the EU Spanish framework. So these are EU regulators. So that's what it all came down to. That is the official reasoning. Now, the reason I think it is that way is a bit different. It's I think it's all I think these are reasonings for it would be like reading up the reasons for why taxes were increased, for example. Why the European Union wants a European Union wide corporation tax, for example. Well, to get fairness, blah blah blah, they would state. So corporations can't avoid taxes, blah blah. Yeah. But the reasoning, in my opinion, is because the European Union's general agenda is, fiscal liberalism, not classical liberalism, but classical liberals. They're not classical liberals, classic liberals. What should I call it then? Democratic socialists, guess. But they are, in the classical sense, social liberals. So that means, no laws on social opposing norms like LGBT, feminism, those types of things. Well, a lot of things you would call postmodernism or yeah, postmodernism is a better word. You can also say cultural Marxism, but postmodernism is a better word. In general, they are very regulative. The European Union seeks to if you read their agenda, I have not for this year, but I didn't read 2025 either, but 2024, you can see that they generally want higher taxes, they want more regulations, they want higher levels of spending, they want more subsidized industries, that kind of thing. They want uh, more tariffs. They want to sort of like lock the EU in this very regulated type of state where they have like subsidized economies with tariff walls around with very high taxes, and they want to make it like we did in Norway where you have to give up all your fucking money to leave Norway. So if I renounce my Norwegian citizenship and moved to Dubai, I became a UAE resident, or Abu Dhabi, whatever. I became a UAE resident. I would have to give up my money, my assets to the Norwegian state. They did that because so many people were leaving. And you might say, oh, but Norway isn't in the European Union. Bro, it's de facto, de facto. The European Union supports that. So when it comes to taxes, regulations, trade, monetary policy, those types of things, they're very, 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 very left leaning. And how can you be left leaning when it comes to monetary policy, you might ask? Well, price controls, that sort of things. The European Union has been pushing for that quite a lot. And these financial instruments are not something that they're friendly to. I think if you look at the timeline, the regulatory timeline for what they've done when it comes to trading, I mean, you can't ban trading. That would ripple the whole supply chain. If you just ban if you just ban forex trading, you would fuck up the whole supply side of things, and spreads would widen out, and export and imports for countries would go to hell, and yeah, you could cause a recession, depression. Yeah, that would not be good for anyone. That's the point. But it seems that they want to ban retail trading. They are not friendly to it. Yeah, not at all. Because in their agenda of taxes, regulations, trade, monetary policy, and spending, it doesn't fit. Because this high spending thing and high regulatory environment, high tax environment needs a more on base tax base. If I was to use a very extreme example, I'm not saying it is like that, but in the Soviet Union, you could not trade. You could not even do black market trading, that kind of stuff. Or I mean, obviously, but you couldn't do. Sorry, that's a bad example. You couldn't do physical trading of anything. It was the whole financial sector was slapped away. And why is that socialist? Like you could have just had really good traders, right? People buying stocks and stuff, and then they would have to pay anything above the average salary. Why didn't the Soviet Union just allow that? It's because when you have that type of economy, again, this is just a more extreme example, you need more people on the ground. You need more people to do base things because you're trading off productivity. And when you're trading off that productivity, you need more people in the labor force. What's an example, you might ask? What do you mean trading off productivity? Okay, so here in Norway, we follow this UA mandate where every company that is considered medium, large, or more. I can make myself full screen, by the way, now. Any company that is considered medium size or bigger, they need to have 50% or more of their employees in leadership or managerial positions to be women. And when you need it to be women, you have to trade off productivity. Because, for example, in Norway, we have industries where, well, actually, we had one locally here in my what'd you call it, region? Yeah, my region of Norway. You had some. I actually remember the company when I got implemented. I was 13 years old. I remember reading about it. They had to get 50% of their managerial positions as women, and they had zero female employees, none. And they had zero applicants. They were complaining about it. They were asking for an exemption, and the company was growing. It was a concrete company. They worked with concrete. I don't understand concrete and that kind of stuff. But they were importing concrete. I thought you could just make it with water and stuff, but yeah, they were like importing concrete and stuff like that. Maybe they're importing stuff more. They were doing concrete for more specifically for housing and that kind of stuff, not for, or they probably were, but it was mainly for private housing, and they had zero female employees. So what they faced the choice of just making positions, managerial positions, and you can't just make it managerial in name. You have to make it managerial in salary. So that means they would just have to hire women. Let's say they had, because a medium-sized company would be like, or would be exactly 50 people, and say they had six managers. They would have to fire three of their good managers that they built their company with. This was a growing company. They would have to fire three of those and then get in three women that would not have the competence. They would be forced to do that, and those women would get manager salaries without doing manager jobs because they wouldn't be suited for the positions they were in. So that is what I mean by productivity loss, because they would make them just answer emails or something like that. And then, so it would just be a drain on the company. They would be paying a huge cost. They would lose three good managers. and they would have to pay three empty positions. And what happens when there is a loss of productivity? I hope you're following this whole point. When there's a loss of productivity, you need more labor. And Milton Friedman had a really good example to this. He he went to a mining site where people were digging with shovels, and he asked the manager, why are you not using advanced excavation equipment? And the guy said, because you'd lose jobs. These people are doing manually with shovels and shit. Why not just get it some advanced excavation shit? And he said, you lose jobs. So Milton Friedman asked him, why don't you just make them do it with teaspoons then? You need 10 times as many people. And that's the whole point. That's why during the Industrial Revolution, workers would go and destroy this automated equipment that eventually led to the biggest rise in human living standards that we have ever, ever seen because they didn't understand. And that is the same thing that's happening here. You need, or that's what the Soviet Union example goes back to. When you lose productivity, you need more workers. So what would have happened is they wouldn't have fired their three managers. They would have just hired six female managers because they need those. They need their male managers, and so you would have paid six empty positions, and that is a drag on productivity because they would be paid to answer emails. They would get $200,000 a year to answer emails. In this example, though, the company just fired a bunch of people and went down to a small company again. Again, productivity loss. So, productivity loss, you can't have people like us just sitting and trading and that kind of stuff on the economy as a whole. So, it is very natural for the European Union to regulate it. I hope that makes sense. I hope the tangent wasn't too long. It wasn't really a tangent, but it was a way of explaining it. I wanted to elaborate on it, the whole fundamental economic idea behind it. Now let's move on to the next question. This one's kind of funny because you can see that Timmy has used ChatGPT to fix his spelling. Usually I struggle with it. So, dear Dr. Rune, Professor Turnstall, now that I have just started, can you guys see it by the way? Yes, you can. Now that I've started receiving a salary, I would appreciate your professional opinion on how I should manage and invest my income wisely. Would you recommend focusing on stocks, gold, or growing a trading account as a long term strategy? So, Mr. Timmy, in your example, because you're not a profitable trader yet, I would just buy some SPY. I could you could do a 50-50. I mean, I don't know how big of a spender you are, but being a big spender, a habitual big spender is going to cost you a lot in the long term. But if you're not, you could put 50% of what you have left into stocks, 50% into your trading account. That will exponentially increase your trading account, trust me. If you're doing like good percent, if you get better at trading, you're doing 3.5 and you're putting money into it in addition to that, your account will explode, bro. So that's what I would recommend you. And then when you get better at trading, you can just dump all those stocks and put it into your trading account. I mean, there's no point in having anything there if you're doing like 6%. Like, because we spoke about that. If you have that, you were talking about that. What the fuck is it called again? Yeah, the prop account from IC Markets with the 500K in it. You're doing 6%, doubling that every year. That'd be insane. And Tim here says, additionally, Professor Tursdahl, I remember our earlier discussion about why housing prices in Oslo are so high. I would be grateful. This is ChatGPT, bro. This is not Timmy. If you could explain it in greater detail the key economic and social the social factors. So, okay, I can explain that to you. Behind the high property market, high property prices, bro. What's up with your ChatGPT? You could say high priced property market, but okay. In Oslo, and how these factors shape the housing market in Norway. Kind regards. Well, thank you, Timmy. I appreciate the titling and the best regards and everything. So yeah, we did speak about housing price in Oslo and why they are so high, and I can explain why they are so high. All right. So first off, let's start with the easiest points first, the most obvious ones. People want to move to Oslo. People want to live there. It's the capital, and it's the biggest city in Norway. So obviously, prices are going to be high there. People want to move there. Supply and demand. So we're on the supply side now. We'll start on the supply side because it's the simplest to explain. Supply side, it's where people want to go. Think about any big city, bro. Sorry, from New York City, expensive as fuck, to fucking London, same shit. To now Moscow, expensive as fuck. To any of those big cities. I mean, how many people are in? So there's 20 million in Moscow. Don't trust Wikipedia. It says like 13, I think. But those are just registered residents. It's actually 20. Then you have London. How many people are in London? I'm not sure. But in New York City, specifically Manhattan, I think there's 5 million people just in Manhattan. Insane prices because people are trying to move there. People gravitate towards those cities. And it's the same with Oslo here. People in not internationally, but here in Norway, people gravitate towards Oslo. But I just had to finish this coffee before it got cold. Now that we've done the demand side, let's talk about the supply. So since 1970, Norway has taken out. Let me think of how. Yeah, the entire real estate market. I had to think. Yeah, the entire real estate market has been taken out of the equation when they're factoring in for inflation. So when you're looking at the CPI, Consumer Price Index in Norway, houses are not priced in. So we could have super low inflation, but house prices would go up like a motherfucker. But in the 70s, house 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 housing growth in price was in the inflation metric. So if houses grew a lot or housing prices grew a lot, you would have higher inflation, so interest rates would go up to counter that. But now that is gone, so interest rates are terminally low, which means that there's always the incentive to buy houses. You can always get these low ass mortgage rates because there is such a bigger push to keep interest rates lower because they took that out. I think they're gonna take out everything they can eventually. Why not? It's also a good political move because suddenly inflation was lower, like shabam. So that makes sense. Since the mid 70s, we've had that out, and since the mid 70s, exactly then housing prices started to explode. Now there are other supply side, even bigger ones. Supply side, I wouldn't say metrics, but we can say metrics. It's not the best word, but I don't have another one. Supply side reasons for why housing prices are going up so much here. It's not just Oslo, it's here in Norway. It's all over Norway. It is because the fertility rate in Norway is so low. And what does that really mean? Like for housing prices, you might ask. So who cares? What happens when the fertility rate is low is that the average price in a, or sorry, the average age in a country goes up. It's an aging population. So if we look at it, countries with a really low fertility rate has a very old population. If you look at it here, average age, Japan, for example, they've had a very low. So yeah, 50. The average person is, yeah, making it the oldest population in the world. They're 50 years old on average. When people are 50 years old on average, it means that the average person, me and you, Sharker, are not. No, Timmy, are not 50 years old. You're 16 years old, Timmy. It means that the demand for housing is not aligned with how many people already own houses. Because people that own houses, even though it doesn't really make sense for me, because no houses are meant to be sold, but these fucking boomers, they don't want their fucking house prices to go down. They don't want that. I don't know why they care. Like if my primary residence, if I bought it for 7 million and then it went down over 10 years to, or fuck, so I'm talking in Norwegian kroner. If I bought it for 700K and it dropped down to 350K, I wouldn't give a flying fuck because it's just a liability. I'd have to pay wealth taxes on it and shit. But for these old people, they see it as their primary asset, something their kids can inherit and then sell or whatever. So it becomes less politically viable. When the average population, I think in Norway it is 40 years old or something like close to 40, 37. I can check right now. It's getting up there. Maybe it's 35. Yeah, it's 41 years old in Norway. So the average age in Norway is 41 years old. That means the average person already has a house and they don't want new young people to get cheap houses because they don't, that would mean the prices of their own houses will go down. And what happens then? Politicians don't want to run on campaigns of getting housing prices down. They don't want to expand housing zones. They don't want to approve. There's no political will to get new housing permits. There's no political will to allow huge new projects. Because if you were to look at it, there's so many companies that want to build in Oslo. Obviously, they can make so much money. They want to build houses, they want to build rental units, they want to expand, but there's a constant no, 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 no. We've talked about the city you want to move to in Russia, and Grozny. It's for those that don't know, it's all the way down south in Russia. It's the North Caucasus. It's in that area. They have been building like crazy. The city is growing extremely fast, but house prices are not going up. They're actually checked it. It's slightly going down. It's because they're building so much. They're approving housing zones. They're leasing it out to these private companies, Chinese, everything, and they're building like crazy. And if they did the same in Oslo, just think about it. It's completely logical. If they approve new housing zones in Oslo, if they approve new high rises, new apartment complexes, if they made some kind of plan like, yeah, we're going to approve 50,000 new household units a year, the housing price will go down the fucking shitter. It will go down the fucking shitter. Besides the CBD, that's Central Business District, by the way, besides the Oslo CBD in the very center, prices would go down and they would go down quite fast. The population would also grow quite fast, by the way. And we'd also get something called urban sprawl because the city would be widening. And so would the city boundaries because they would be building out of it. They would be building out inside of it as well, demolishing smaller buildings and turning them into bigger ones, that kind of stuff. But there just isn't the political welfare due to due to the aging population. So the boomers are fucking us. That's it. That's it. They got cheap houses and then they pulled the ladder up with them when they fucking went up. And you also asked about, you also asked, and social factors behind the high property market. So, Timmy, the social factor is that people want to own a house. That's it. Don't you want to own a house? You want to be some forever fucking renter? You want to have a landlord that can fuck with you? Give you 30-day notice, get the fuck out of here. No, it is like seen as the epitome of human life to own your own residency. I'm in my own residency right now. It's fucking great compared to. I fucking hate this fucking wall though that it's sloped. But beyond that, I mean, it's not. It's only sloped here, but yeah, cool fast shit, bro. But yeah, it's the epitome of what people want, their own house, and it has always been that way, at least in the West. I know in Asia, like some places like that, people don't really seek to own properties. They're more into renting it. Also, China has also been doing huge expansions of zones. What China's been doing is fucking insane. Instead of just letting it, what I talked about, urban sprawl, they basically just built new cities, bro. Like next to big cities, they built another big city. Just skyscrapers going up and everywhere. Imagine if that happened next to Oslo. If there's political will for that. If the boomers in Norway were like, you know what, we really want to help these young people. We don't want a house for over $100,000 in Norway. Fuck that. Then that would definitely lower housing prices. And also, there's the factor of government revenue. If housing prices went down a lot, if I then the housing appraisals will go down a lot as well, and people would be paying a lot less in property taxes and in wealth taxes. So the government doesn't want that. If we didn't have those two, which are completely useless taxes in my opinion, they don't do much besides make recessions worse because it's a lot easier to lose your house during a recession because of those taxes. So it makes the more economy more fragile. I'd rather just replace it with a 1% higher MVA, for example, or VAT, 1% higher VAT, and would cover that. So I'm not a big fan of that, but regardless, that's not really relevant. But I think that covers all of it. I hope those were clean, good explanations for you, Sharker and Timmy. I feel like that answers the questionnaire really well. And the reason I didn't answer it yesterday is because today, sorry, I didn't answer why I didn't answer it yesterday is because my sleeping schedule has been quite fucked and I really needed to fix it. So I went to sleep early. I didn't do the late recording. But with that said, if you like this video, feel free to hop in the Discord. I need to get a new chair too. I bought a new keyboard and a mouse. And I want to throw this piece of shit out the fucking window. But yeah, with that said, if you want to join the Discord, feel free to join. It'll be linked in the description below. Nothing there is for sale. Nothing is monetized. None of that. I don't run any prop firms. I'm not affiliated with shit. This is a trading journal. I like economics. I like finance. I really love it. I've been into economics my whole life. I started my bachelor's when I was 15 years old. Skipped a lot of grades, all that. I've always been into it, and I had a minor in finance as well. This is all I've been doing my whole life, and I've been trading my whole life as well. So this is essentially just a trading journal. With that said, thank you for watching, and I'm going to end it right here. Bye bye.